Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow, so the commitment of traders, which is the COT data, so what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is testing a quite strong monthly historical structure support area. In fact, this zone was previously acting already as support here, again support here, preceding all these rejections to the upside, again support here, preceding all this rejection. It once again acted as support here with the creation of this green candle, and we can see how just last month the market tested its zone and is currently rejecting it to the upside. So from a monthly perspective, it is quite clear that we're currently rejecting support, and we could expect more bullish price action to be created, as already happened here, 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 and again here. So from a monthly perspective, everything seems pretty bullish. Dropping down on the weekly, what do we see? Now, from a weekly perspective, the situation is quite different. In fact, we do have a market which at the moment is trying to break above this previous weekly resistance, which is now turned support. Now, there is definitely the possibility to see a deeper test of this support before then getting rejected to the upside. So here in the weekly time frame, it seems like we could expect a bit more bearish price action for a deeper test of this support, and only at that point we could see bullish price action being developed away from the area, rejecting in a stronger way the monthly support that we have previously identified. We can also notice how, if we zoom in, we can see how this weekly candle here is actually a red candle with a very long wick. Now, usually when you see a candle like this, the next candle is supposed to fill in the wick. So here on the weekly, we could expect a bearish week to develop for the market to fill in this weekly candle, and only at that point, after that, we could expect a bullish price action to be developed. Now, if we go down on the daily time frame, what do we see? Well, from a daily perspective, the situation is quite clear. I did speak about EURUSD a few times in the past. I spoke about EURUSD after this impulse. I explained all the reasons for which we could expect first this correction and then more bullish continuation, and that is exactly what the market did. Then we had the creation of this W. I wanted to see the completion of the W formation at the neckline, which is now exactly what the market did. And by the way, I will link in description these previous analysis, so you can go and check them out for more free education. However, what we have to notice at the moment is that this correction is happening quite aggressively. Now, in a situation like this, where you're having a very strong correction, in order for the market to continue to the upside, as we would like to see, we need to see the market create a deceleration. Now, first of all, let's identify the structure. What we have to see is that during all this move to the upside, there is one candle which is not related to the move, which is exactly this red candle here. Now, this shows that when the market was testing this red candle, when the market was testing this area, it created this red candle, meaning that this red candle is previous daily resistance, which is now turned support. So this area here is all very strong support. We can also notice that if we look at the movement from here, we had an impulse, and now the market is providing a correction. Now, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly here where I have placed this box, with the 0.618 being exactly here and the 0.786 being exactly here. Now, this creates confluence of support at this area because we have both the Fibonacci levels and this previous daily resistance turn support. So in order for the market from here to create a potential rejection to the upside, it is very important that we will see a deceleration at this area, meaning that we see maybe a couple of daily candles that start to show some wicks at this support and some rejections, and only at that point we could expect more bullish continuation. If the next candle will just continue to be very bearish, we cannot be expecting any kind of rejections to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, the first thing that we have to keep in mind is that if we are checking the data for the euro, we are actually already checking EURUSD, because all currencies on the spot are traded against the USD. And if we look here, what we can see is that with the last reports, we went from having 143k net positions all the way up to 164k net positions, showing how institutions are starting to shift to the bullish side of the euro, meaning to the bullish side of Euro USD. Now, this does increase the probabilities that we might see a deceleration in this area. However, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective, and they indicate that we might see a reversal away from the zone. However, then we have to go down on the intraday time frames for confirmations, and the best time frames are the 4-hour and lower. Therefore, how we could be approaching this potential rejection to the upside? Well, as usual, potentially also with students, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to potentially shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, only at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97, plus totally optional, so it's an option. If you join Blueberry Markets from your student dashboard after you join the mentorship program and you open a trading account with them, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and the timer goes to 0. And directly from here, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.